All right, welcome to the Explainer. Today, we're diving into three massive structural shifts that are hitting us right now in the back half of 2026. Look, we're not just talking about your everyday market blips here. We're unpacking the absolute sheer scale of three major global stories that are literally colliding in real time. We've got an unprecedented surge in tech borrowing, intense geopolitical pressure boiling over in the Middle East, and some truly historic domestic debt, all converging at the exact same moment. So I want to ask you this right off the bat. How exactly are AI data centers, shifting global oil supplies, and a $400 million ballroom reshaping our economic reality in 2026? We've got an immense amount of ground to cover today to see how these three forces are interacting. So let's just get right into the data and see exactly what the numbers are telling us. Okay, let's dive into this massive leap in tech infrastructure borrowing. Back in 2025, AI-related tech debt issued by major American companies sat at around $12.5 billion. But fast forward to 2026, that number has skyrocketed to roughly $220 billion. I mean, that is an absolute explosion in borrowing in just one single year. It's driven primarily by tech giants, think Amazon and Alphabet, who are issuing just unprecedented amounts of debt to finance the whole AI infrastructure boom. To really put that staggering $220 billion figure into perspective, we've got to look at the broader market impact here. Yes, it's funding the AI boom for sure, but it's also starting to cause some serious investor fatigue. See, as these companies issue repeated bond offerings, they're having to offer larger and larger concessions just to bring buyers to the table. And here's why this matters to the broader economy. This massive pool of corporate borrowing is now competing directly with government bonds for investor capital. That dynamic is actually putting extra upward pressure on long-term treasury yields. Now, what's really interesting here is how this macroeconomic pressure is colliding with some serious strain on the geopolitical front. Shifting our focus over to the Middle East, President Trump has actually described the planned sanctions campaign against Iran as an economic D-Day. The administration is really emphasizing severe financial pressure right now, and in turn, Iran has threatened a devastating response if Washington actually goes ahead and imposes these additional sanctions against Tehran and its trading partners. And you know what? We're already seeing rapid, highly tangible effects on global shipping because of these tensions. Commodity vessel traffic through the incredibly vital Strait of Hormuz literally halved overnight. It dropped from 14 vessels on Wednesday to just 7 on Thursday. On top of that, zero. Literally no very large crude carriers or liquefied natural gas tankers crossed at all on Thursday. The physical movement of global trade is being heavily restricted. So the crucial takeaway here is how this geopolitical strain bleeds directly into our physical energy markets. With the blockade restricting shipping and Iranian oil availability for Chinese buyers dropping off a cliff, oil prices have now advanced for a sixth consecutive session. Right now, Brent crude is trading near $93.86 a barrel, while West Texas Intermediate is hovering right near $86.99. It just goes to show that global trade remains incredibly vulnerable to longer shipping routes and this exact kind of geopolitical disruption. Let's move to the domestic front and see how this builds. While global trade is facing those massive disruptions we just talked about, another huge spending story is unfolding right here at home. Chief Justice John Roberts has temporarily allowed construction to continue on President Trump's $400 million White House ballroom. Now, lower courts had previously ordered the whole project halted because they found it lacked congressional approval. But as the Supreme Court reviews an emergency appeal, construction on this $400 million project is actively proceeding. But when we juxtapose that $400 million ballroom figure against the broader macroeconomic picture, we hit another truly unprecedented milestone. The United States national debt has officially reached a record $40 trillion. This immense figure is largely driven by continued rising federal spending, coupled with those increasing interest expenses we touched on a minute ago. Remember that $220 billion in AI debt that's competing with government bonds and driving up treasury yields? Well, it's all connected. That dynamic is making it significantly more expensive to service this historic level of national debt. Wow, okay, we've covered an incredible amount of ground today. But as we wrap up this explainer, I want to leave you with a final provocative thought. How will these massive expenditures, from hundreds of billions in AI data centers to a $40 trillion national debt, to geopolitical blockades that are literally throttling global oil shipping, how is all of that going to impact your daily life? The sheer scale of today's spending shocks is, without a doubt, fundamentally rewriting the global economy. So keep these figures in mind as you watch the markets unfold this week. Thank you so much for joining me. Keep learning, and I'll catch you next time.